Well, joining me now for more on what's next for Exxon and the energy sector overall is Sam Margolin, Managing Director at Wolfe Research. Sam, thanks for joining us. I see you have an outperform rating on Exxon and a $77 price target. The fact that Exxon did say, and Darren Woods did say today, that they're looking to double earnings and cash flow over the next 6 years while bringing down emissions. Your takeaway?
Yeah, I mean, if you want to connect the dots between those two things, right, I think you have to level set and say that the world wants to get to zero emissions by 2050, generally. But before that happens, we have to hit peak emissions before 2030. I mean, we haven't even peaked yet. And so the initial phase of this emissions reduction globally is achieved by kind of rolling over from a peak and getting more efficient. And so the combination of becoming more efficient, high grading the portfolio to a lower emissions kind of backdrop is good for margins because, again, you're sort of leaning into the most efficient asset. So the first phase of reducing emissions is margin positive, and those two things happen together because of that efficiency effect. So a lot of the things that he's talking about that drive earnings power higher have been in place for a while. Today's announcement was sort of a reiteration or an update, a progress report of some of those developing assets. But in general, I'd say, it makes sense given how it all comes together.
I know we've started to see some similar emissions cutting news out of other oil majors, particularly out of Europe. How does this compare to that? And do you expect that we're going to continue to see this trend? What does it mean for the stocks?
Yeah, so Exxon's talking about 25 to 30 or 20 to 30% GHG emissions reductions by 2030. And that's pretty much in line with the peer group. And I think it's aligned with sort of where Paris wants everybody to be too. The harder part to forecast is that path to zero, from a 20% reduction to 2030 to 100% reduction between 2030 and 2050. And that's the part that relies a little bit more on projection. But this first phase, Exxon's right with the peer group, and that's where everybody should get to over the next 10 years.
When we talk about that reduction, we're talking about reducing Exxon's own carbon footprint or emissions footprint, right? We're talking about company by company there, correct?
Yeah, that's right. So that's not, you're talking about scope 1 versus scope 3. So scope 3, which is not addressed here, is what Exxon's customers emit. So, right, the total life cycle emissions.
Very quick question, quick answer, if I might. Which is better to invest in, gas or oil?
I think global gas has better fundamentals. I didn't really like oil set up before Omicron. Obviously, I think a lot of those fears are confirmed on the supply side. I think the outlook for international gas prices is much firmer over the long term.
All right. Of course, we hear that natural gas could be one of those bridge fuels to a cleaner energy future. Sam Margolin, thanks for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.